I started working in finance like 15 years ago as a financial advisor, and that was the first time I was connected with the financial space. And I've always been interested in money, so learning more about how things work in finance was a good start. I spent a few years there, and then I think it was exactly 10 years ago when I started developing an interest in programming. And I was mostly interested in game development, and that's where I started my journey as a coder. But I always liked AI the most, so I try to specialize in various areas that are connected to AI. And I've always had side projects that were based on AI and, of course, making money. I picked up forex trading as a hobby next to programming, and then over the years it just evolved. I experimented with poker bots, and then started working on different trading strategies and algorithms. And it took years until I finally found some strategies that really started working, and then we are here and having this discussion.
Beautiful. Thanks for having. As I said, thanks for taking the time. And as I said, your background is interesting. So you got into forex, got into the automation of your poker bots. What got you into crypto?
I think it was I was using a platform back in 2015 and 16 called eToro, and it was mostly used for copy trading other traders, and then one of the traders I copied started buying Ethereum, and it was the beginning of 2017. And I was like, this looks interesting. So I started researching what is this thing. I had a friend who actually mined Bitcoin back in like 2013. I was like, whatever. I don't know much about it. But then I became increasingly interested in the financial potential at the first place in this space. And then as I dived deeper, I also understood more of the technical aspects of Bitcoin and blockchain and the whole crypto space. And it has come a long way in the past 5 years since I've been involved in this space. And I think the technology has also evolved a lot, and it really has a bright future, considering where the world is heading from a technological perspective.
Of course. So like thinking back to it in 2013, 2014, talking about cryptocurrencies and mining, it sounds quite alien when you think about it.
Yeah, exactly.
So like, what decided to get you into automated trading?
So I think the most precious currency in the world is actually time, and we can have an unlimited amount of money and buy all the things we want, but we cannot buy more time for ourselves. So I'm seeking whatever I can find to be able to squeeze out more out of my days and spend time on things I enjoy doing, like cooking and being with my family and playing or whatever. And trading is something that is a very, very good thing towards the way of financial freedom. But I also don't want to be glued to my screens 24/7, because if I'm just sitting there watching charts, I won't be able to do anything else or enjoy the money I made. So I've always tried to find ways to automate stuff that I don't really want to be doing manually anyway. So I've been seeking different ways of automations towards my or through my career in various areas, and then trading just became one of those when I can just glance on the chart like 1 or 2 times a day to have an understanding of where the market is going, but I don't need to monitor it, and I can know that I will have algorithms that will take care of checking them and executing trades throughout the day.
Of course, like as you say, like we are human, we need to rest and take up time in other hobbies and interests. So automation is a good complement to, your trading everyday life.
Yeah, absolutely. And usually I notice that most of the there are usually big moves while I'm sleeping.
Yeah, of course, same here.
Because I live in Europe, so I'm I'm sleeping in a time where most people are actually active and busy. So if I'm going to trade manually, I either need to wake up early or go to bed very, very late. Or if I have some plans in the evening, I might need to cancel them because the market is moving. And these are things that I'm not very comfortable doing. So I would prefer to hand them over to someone else or something else in this case.
Yeah, of course. And for automation, so what would you say some of the benefits are of automating your trading compared to actually being a human and trading? So what are some of the benefits you would say?
So the first benefit of automated trading is obviously that you do not need to spend any time watching the market because you have eyes on the market 24/7. The other thing is that bots are purely systematic, which I value a lot because, and this is probably something all authors will going to say, that human emotions will get into the way of executing systematic trading. So even if you have a very good system in place that was backtested for years and very profitable, as a human, you won't be able to execute it perfectly every time because you will be biased. You will hear some macro news, you will read some article, some of the crypto influencers will say or share something, and then you will be double checking yourself and guessing that, okay, I should be doing this right now, but is it really the right choice? Or you take too long to respond to something that's been there for a while, and then you can miss out on the opportunities. So having bots that purely systematic takes out emotions of the quotation and also can react to the market in like fractions of a second. It's something that really gives you the benefit over the long term.
Of course, and that's why like we're all big fans of automation at CompendiumFi. Just makes life easier. So
Absolutely.
This isn't the first series of bots you've brought out. So the name Elastic, so your Elastic series of bots, it's quite unique. So why and how did you think of this name?
Well, the naming was actually a funny story because I have a small community on my closed Discord server, which mostly consisted of people who are actually subscribers of my bot or are interested in subscribing and wanted to learn more before they decide to sign up. So if any of you is interested in my bots or getting to know me a bit more or more information about my bots, let me know in a DM and I can send you one if I think you are happy. You're very welcome to join. And so eventually when I started developing these bots, I had the name Range Walker on them because they are walking ranges. They trade sideways markets. But I knew that this name might not be good enough to be put out publicly. So I asked the guys on my Discord that, what do you think? What would be the good names for these bots? And they've been using these bots for quite a while back then, because I gave early access to these people who were interested in. And one of the guys suggested that maybe we should call these elastics because they work like a rubber band, that when the market is falling or rising, we keep DCAing more positions and eventually increasing leverage. So like a rubber band, we are pulling it back, and then if the market bounces, we can just slingshot the trade over the other side and rack in some huge profits. And I really like this idea. It was short, it was simple, and it really represented how the bots actually worked. So the elastic term came from here, and then I added a scalp and swing because these bots can run on 2 different time frames. Swing trade 15 minutes and scalp trade 1 minute. So they can also suggest you how often these bots are going to trade or what's the type of moves they aim to capture.
Of course. So you did mention that your leverage in and DCA into position. So what type of leverage you're looking at, and how would that play out in a trade?
Yeah, so the origin ID was to always open a trade with 100% account size at 1x leverage, because we have an understanding of how the market is moving and we expect it to move to a certain direction. But of course, we cannot be 100% certain, because obviously we have like a 50% win rate on average. Well, it's a bit better in the past, but in the long term, we are aiming to do 50% win rate, and it's good enough. So we always open a trade with 1x leverage. And then if the market is starting to go against us and we start to get underwater with our position, we can look for additional entries to lower our entry and have a better average price. So there were a lot of cases in the past when considering where our first entry was and when our closed our positions were almost like break even. So if you stayed in the same position on 1x, we would be making zero profits. But due to this DCAing strategy, we were able to secure additional profits because we were able to get a better entry by opening additional trades. So the bots have the ability to open an additional 4 trades after the first one, so they can DCA up to 5x leverage. And then, of course, as you can imagine, this leverage can magnify all the moves the market is moving. So, for example, if we are just having a 1% win on normal sizing, then with the 5x, we are closing actually a 5% win. And of course, this is true for the losers, so it goes both directions.
I see. So saying that, like if you're trading bots, so you're saying that it's elastic, if price moves away, the probability of it going back to its mean average is pretty likely. But however, in a strong trending market or breakout, how would your bots handle that breakout?
Yeah, so the I think creating scalping strategies that trade ranges where you identify some range and you sell the highs and buy the lows is something that can be done pretty easily, even as a manual trader. So if you can identify that the market is going to range, you can make a lot of profit from that. And the hard part is identifying when the market is going to stop ranging and catch a breakout before it happens, or a trend before it starts, because you don't want to be caught on the wrong side of the trade with 5x leverage and then just waiting for the market to come back to you, because a 20% move is going to be lethal and your account will be liquidated. So the core strategy has been running for like 3 months, and we didn't have any countermeasures against these breakouts. We had some time. We have different metrics that prevent us from going into a position if we see the market is volatile, but we never closed out the position. This is similar how my old bots like Dreamcatcher and Airshaker were trading. They were always in a position, and this is how these bots also started out to be. But then when we started the rise in March with all the Luna BTC accumulation, we actually had quite a big move, and one of the bots got liquidated on that move. And it made me reconsider how these bots should handle these positions, because obviously the biggest concern with any bot should be risk management and account safety. So we should not allow the bots to liquidate a user's account. It's not what we want. So I started working on a volatility forecast model, and I actually spent quite a lot of time on being able to identify market situations and conditions where we do not want to be in a trade and just simply close out the trade, sit on the sidelines and wait until the market returns to a range we can trade. And it's been implemented since the beginning of April, I think, and been working really well over the past months. I'm keeping the old bots as well and sending signals to my backend so I can compare the performance of these bots. and they are night and day. So they are really handling all the volatility well. So what we are doing right now is if we expect volatility to increase, we disable execution and simply put a stop loss at our entry. So if the trade ever comes back to our entry, we just close out the position and wait until we return to a range. If we are fortunate and we are in a position which agrees with where the market is going, then we just ride out all the trend, all the moves, and profit of that. And there were also like 2 cases in the past with the BTC scalp strategy, when, for example, the scalping what was shorting BTC from like 39k to 28k, and it was just a single short because we had volatility alerts all the way down, which suppressed execution, but we never went back to our entry, so we didn't close out the trade. So we were able to profit from this move, even though we don't aim to capture these moves. We would prefer ranging markets, of course.
That's interesting. And I guess you've had like a good experience there, like a whole Luna situation where the market took quite a big hit. You stress tested your bots there, so that was quite interesting. You learned, hey, like I need to do like risk management and say, prevent this from occurring in the near future. So, good work on seeing that vulnerability and correcting it. So I was going to ask you, like you talked about your Earthshake and Dreamcatcher bots. So, what drove you to create your Elastic series of bots on top of your legacy Earthshaker and Dreamcatcher bots?
All right, so I developed these bots, Earthshaker and Dreamcatcher, in 2020 in the summer, towards or in the midst of the past bull market, and I used a lot of data from the past years, which helped me to identify various structures and patterns I wanted to trade, and they were really effective trading those. And if you check the performance from last summer, they've been making outstanding performance, beating everything else on the market. And this was because they identified some patterns they were able to trade on in the past. But during the past year, in 2021, after May, the market has drastically changed from my experience and based on my understanding, of course. So it's not something I'm objectively saying that happened. This is something, as I understood, happened last year. So my bots are very good at beating retail traders. So they can take all your money and all my money if we are going to trade manually. I'm certain of it. But obviously I am personally not very good at fighting institutions and hedge funds and people who's been in this space for like multiple years and have big teams and big quant firms. So I think there's been a big shift in the market last year when institutions started to take over, and the markets are now engineered to take money from retail traders. So we are going to see shakeouts and fake outs and build some hopes for people to FOMO into just to go back below when they will sell in a loss. And this is the kind of market manipulation that wasn't something my older bots were able to trade efficiently. I'm sure if there's a new bull market will come with a new halving cycle and all that in a year or two, they will be able to capitalize on all the retail activity that's going to come back, because it will come back. But right now it's just a bots game with a lot of institutional manipulation, and they weren't very good and in making money in this environment. Dreamcatcher actually been doing great because it can scalp in some ways, not as effectively like the Elastic bots, but it can profit from these environments. But Earthshaker is less lucky in these environments. So I spent the second half of last year trying to figure out what has changed, why my bots stopped working as well as they did before. And as I was doing a lot of research and experimenting with new strategies, I actually found that maybe I will need to look at lower time frames, because my trend bots are working on 4 hours, and in 4 hours, a lot can happen. So I started looking at 50-minute candles and started working on improving the scalping of Dreamcatcher in the first place using 50-minute candles. And also I was experimenting with different metrics and indicators and strategies. I stumbled on one of the core features of how the Elastic bots work. I developed a metric that can identify ranging markets and then establish the ranges, and then also dynamically modify them as we move forward in time. So my ranges are not static. It's not something that we drew 2 lines like 2 months ago and they held. They are changing every bar. And as I was trying to implement these changes in Dreamcatcher, I found that with the DCAing aspect, I can actually make it much better and work much more effective. Because even though we are trading the ranges, there are a lot of cases when we would only be able to close out our position at the original entry, as I mentioned earlier. And without the DCA effect, we wouldn't be able to secure profits. And I didn't want to change how Dreamcatcher or Airchecker fundamentally works, because they are set to be trading 1x leverage at all times with 100% equity. And adding DCAing into this or increasing leverage is not something I wanted to put on my existing subscribers, because all of a sudden you see your account like trading 3x leverage and you would be like, wow, I didn't sign up for that. So I thought it would be better to just promote this core strategy as a new one, with all the different aspects from my old ones, and then be consistent with the messaging. So from the very start, you can know that this bot is going to trade 5x, and if you aren't comfortable with that, you just don't sign up.
That's a good way to put it. And like I've liked how you've talked about your old bots and how they were good during that time, like during a trending market, but now the market's changed a lot in the past several months. Would you say that, hey, like your trading bots, are you trading bots like different tools for different jobs? So like, for example, like you have like your trending markets and so like your Earthshaker dream catches will do better. But now in a more choppy market, uncertain market, the Elastic series will perform generally better in these conditions compared to a trending market.
Yes, this is exactly the case. So obviously, in a perfect world, you would have a single bot that will do all of it by itself, and it will secure your profits no matter what. But I also think there's a very fine line that separates trending and ranging and choppy environments, and being able to identify that, okay, the last 2 weeks or the last month were perfect for scalping. And you were able to look back and you see that, okay, this was a ranging market. But can you identify this is in advance? Can you tell that, okay, next month is going to be choppy? You can estimate it, but if you estimate wrong and then switch your trending abilities off and focus on scalping, and then the market didn't chop, it continued trending, you just missed out on a lot of profits. Or if you say, okay, we are in trending mode now, let's fire up the rockets, and then market just keeps on chopping, then you will just going to be, losing money on all the trend trades you didn't want to trade. So I think this is going to be my next attempt, trying to identify these markets way in advance by using some more metrics I can find. But right now, I'm not confident I would be able to do this efficiently. So I thought it would be better to simply separate the bots. So we have Dreamcatcher and Airchecker for trends. Dreamcatcher can also scalp, but with limited abilities. So if we are going to have a ranging sideways choppy markets, the Elastic bots are the ones designed for it. And to be honest, after the bull run we had last year, I'm not expecting another bull market, especially in this macro environment. So we can always trade lower and we can trend lower, but as I usually say, the downside is limited. So if we move another 50% from here and down, it will shake the crypto markets. While if we move up 50%, everyone will be like, okay, this happens. So I wouldn't short aggressively from here, because there's a lot more risk in betting the market is going to further go down than just simply betting on it's going to move sideways for an additional several months.
Yeah, that's
Makes sense?
a good way to put it. So like it's all about your risk appetite and where the probability. That's what trading is, probability. And
yeah, exactly.
So that's the way I think about it as well. It's all about probability. So let's transition this talk into more for bot authors and potential bot authors in the future. So, like, how would you approach like building a bot? Like, what is your logical process you'll go through?
So, as I mentioned earlier, I'm systematic. So I like to set up rules and then see how these specific rules would have played out in the past. Sometimes I'm seeing people on various spaces, like on several close Discord or Twitter, when they or even gurus who are speaking on YouTube interviews and saying like, okay, I have this method where, for example, I have this RSI and use the SMA of this RSI and it crosses this level, then we are going to have a bull run and it's all fine. And then they post like 3 or 4 different examples of how these trades would have played out, and obviously they are all great. But we are humans, and the issue with showing these trades in screenshots or on video is we are biased and we only look at what we like and tend to not look at what we don't like. So they are not going to show you the additional 10 trades where these trades would have resulted in losses instead of wins. So I think if anyone wants to have a good trading system, it's paramount to learn very basic scripting, for example, in Pine on TradingView. And if you have a strategy in mind, which you think could work, always make the effort to put it in PineScript and backtest it, because backtests are not lying. They are going to show you if your strategy is profitable or not. Because as a human, if you're only looking at a few trades and say, oh, this worked really well in the past 2 months, I'm going to execute these trades manually from now, you might be surprised that they are not going as good as you expected to them. So make a strategy, backtest it, and then you will see if it works well or not. So this is the first step I always take. If I find something interesting, if I read something interesting, if I watch the video which claim to have a very profitable strategy or anything else, I always make the effort to put them into strategies, backtest them on various time frames, various assets, and see how consistent they are. Yeah, that's a start. Another thing I think is very important when building strategies is I see a lot of authors like to publish backtesting results. For example, here's my bot. It's been trading for like 3 months live, but I have the backtest results for 5 years, and it would have made like 1,000% profits. And I think this might not be the best idea to advertise past performance. I personally do not share any backtested results of my strategies because in most cases, the data available in the past has been used to create the strategies. So you wouldn't be able to create this strategy without knowing how the market behaved in the past 5 years. So obviously, if you like, I would say, like, if you used only the data in 2017 to create your strategy, and then you didn't change anything and just tested it on 2018, 19, 2021, then okay, it's fair enough. You did well. You were able to predict the market. But if you used all these 5 years for developing your strategy, for observing different patterns, creating metrics, then just don't share these results, because they helped you to make the strategy, but they aren't indicative of how the strategy actually going to play out in the future.
Of course, it's like pretty much like if you were to adjust your trading strategy on the previous several months, for example, that's a sufficient bias when you think about it.
Yeah, exactly.
That's
so
problematic.
Yeah, so I think the market is constantly evolving, and as we have seen, especially in the last year, so things that worked like 5 years ago are no longer working in this environment. So you need to adapt. You need to be able to change your strategies to be able to work in recent conditions, because otherwise they are just going down. And we've seen a lot of really great and profitable strategies, or even funds in the past that were really outstanding and then just went down and been like, I don't know, 60 or 80% down in the last year. And this isn't something you want to see. But also being able to adopt your strategy to these new environments is one thing. But then calling it like, okay, I changed the strategy based on the last 6 months, and then here is what it would have done in the past 5 years, is something you keep to yourself, because it's just for you and not for the public.
Yeah, that's a good way to put it. So, as a bot author, what would you say some of the main challenges of creating profitable strategies are?
Well, I think the main challenge is something that being interested by people in the, I don't know, since the stock market has been around, because if you have a consistently profitable strategy that can beat the market, you are essentially printing money, and you have unlimited money for your future. So I don't think anyone will be able to create strategy and just let it work and not touch it ever again, because after some time it will break and will go downhill, as we've seen in the past as well. So the main challenge is being able to beat a game that's designed for you to lose money, because obviously that's what the markets are. They are designed to take money from you and from me, from anyone else who is engaged. And being able to have an edge over the market and being able to be someone who can take all this money which is going away from people is something you need to be focusing on. And if you put it this way, it's a bit negative that you are taking other people's money, but the markets are zeroed out, so you cannot print money out of thin air. You have to take it from someone else. So the main challenge is being able to figure out how you can have an edge in the current trading environment. And it has so many factors to consider, so many participants to look at, taking the macro into the quotation and anything else, that it's a huge dump of information which needs to be processed, and it's just going to be harder and harder. So I think the main challenge is being able to create something that will have an edge based on the information available. Maybe limit the information used as much as you can, because the less things you need to keep an eye on, is the easier for you as a human to understand what the strategies are going to be trading. And also what can be the third point in the challenge is not to be overconfident on past results and say that these bots are going to be great in the future, especially in backtest. So
Yeah, in this
always focus.
in this space over the last, say, 18 months, 2 years, you've seen some bots have done tremendously well. And like, you know, in the following 3 months, as soon as conditions changed, they've given back all the profits they've made in the past year and a half operating. So I thought maybe some top performing bots available to the public, but as soon as conditions change or like the environment's changed, they've just, you know, stopped performing as well. And that's obvious, you know, seeing that over time. So that's why I like your approach, saying, hey, like, you know, you posted out on Twitter last week saying, hey, like, you know, not all bots are performing as well. However, like across the board, if you subscribe to, you know, scores of like 4 or more bots, then you have a monthly return of like 60%. So like diversification is quite key if you think about it.
Yeah, and I think one more thing you need to keep in mind is fees, because what I'm seeing is a lot of platforms, even big bot marketplaces, doesn't actually calculate fees, but just estimate them. So, for example, my bot Dreamcatcher is currently at an all-time high on its performance without fees. So based on the signals, we have like, I don't know, 1,800% profits in the past, I don't know, year and a half maybe, and it's quite a lot. But if you take into account slippage, so I'm modeling slippage on my backend, I'm taking actual prices with a delay into account. I'm fetching all the funding rates from the markets and calculating them, also taking maker fees or taker fees into account. And I know that Compendium is also doing the same. So they are fetching actual control accounts balances each day. So they are showing you how the strategy actually performs, taking all the fees into account. And I think this is invaluable, because if you take all this into account, the total performance is like 1/3 of what the signal's performance is, because fees are really eating into the profits.
Of course, and that's one of the main reasons why we'd look at CompendiumFi and said, hey, like, you know, other platforms, they're just paper trading. Those are paper trades. They don't factor in the funding rates, the slippage, the trade fees, and that's a huge difference when you calculate it. So, you know,
yeah.
So it all adds up, and that's why, like, we feel to be transparent and be upfront, honest. Say, hey, these are actually traded accounts, not paper traded accounts. So that's why and how we do things different at CompendiumFi. So when you moving on, so like when you are designing your bots, so like would you say have one indicator for conditions is valid, or would you prefer to filter out those and have more than one indicator to say, hey, this is a correct signal for the direction the market's possibly going to go? So like would you say I like to have one indicator or multiple indicators?
This is a great question, and I think the sweet spot is in the middle. So you don't really want to put all your eggs in one basket and rely on a single indicator, but you also don't want to go full blown up and say like, I will just put 50 indicators in this and then figure out how to make that work. I actually have people who approach me, ask me if I can build a strategy for them, and I'm always open for discussion. And I have helped many traders to have a basic understanding of scripting and how strategies can be built. And they are now able to build their own strategies and experiment with the ideas, which is, I think, great. But I have numerous requests when someone came to me and said, all right, so I think if we can take these 25 different metrics and then put them into a strategy, see their signals, and then we will need to find out the correct weighting between them. And then if like 3 of them signals a buy opportunity with this weighting, then we will go long, and then we do an opposite with shorts, and we just fine tune the parameters until we figure out the weights. And this is not going to work, because what these strategies are going to result is a heavily overfitted strategy on past data. So, okay, you figured out what worked well in the past, I don't know, 5, 10 years, but this is not something that will make you profits in the future, because you just overfitted the strategy on the past. So I think being able to figure out the fine number of metrics to use is the key here, because you want confluence. You don't want your trades based on a single metric or a single signal, but you also don't want to overfit your strategies.
I see. So to summarize that, you're pretty much saying, hey, like, you want to have a few indicators that make your strategy effective. So let's say I'm a trader. By default, I like scalping. So like I wouldn't fit trending indicators with scalping indicators because that's going to give conflicting signals. Like,
can you repeat the last part?
Yeah.
Sorry.
So by default, like, say I like scalping as a trading method, and so for example, if I'm building a trading strategy or a trading algorithm, you want to like be selective on the indicators you are using to fit the trading strategy you're trying to create. So there's no point bringing in trend indicators that are made for trending environments if you're trying to build a scalping bot. So like, yep.
I would say mostly I agree with the statement, but not fully, because the trending indicators can help you figure out if you are in an environment that you don't want to scalp either. So you will need to take into account this one. For example, the volatility forecast metric I'm using in my strategies for the new elastic boss to sit out of the markets are actually looking at multiple time frames and try to figure out if they are all ranging on all time frames, or if we have a trend or a breakout forming, and then they can close out the positions. So you might want to use trend indicators for this specific purpose. But obviously, they are no use for you if you just want to scalp like highs and lows, because they're not helpful in this manner. So you need to be able to identify what metric can bring to your table, what is their purpose, how they can be useful for you, and then figure out which is the best mix of these, and also which is the one based on the lowest amount of metrics, because the higher amount you go, the more you are prone to overfitting.
That's a good way of putting the whole like concept of overfitting when you design the bot. So that's very useful. Thanks for sharing that. So pretty much any words of advice or pieces of advice you want to share to individuals that are trying to learn PineScript or Python to develop a bot. So any piece of advice you want to share with them?
Yeah, I think TradingView and PineScript is great, and I just wish I discovered them earlier, because I spent years creating native trading applications where I can model how the market is moving and backtest various strategies, and then implement various metrics, and then do all the visualization. And it was a lot of work, and I spent a lot of time on things that wasn't necessary, because I eventually never got to a good strategy that worth executing. However, if you use TradingView and PineScript, even as a free user, you can snap together a strategy in a really short time, and then you can backtest it on various assets and time frames. You can see all the visualization, you can draw lines and plot the different metrics, and then see all the trades with all the returns calculated. And it's really effective and helps you to accelerate your development, because let's face it, most of the times the strategies you are working on will not be profitable, and you don't want to spend any time on anything that is not telling you the answers you want to hear, because you want to see if a strategy is profitable or not. So you don't want to build a whole trading system in C++ or Python or write visualization or implement metrics, if the strategy is not profitable in the first place, it just doesn't work. So just go for TradingView and sign up for it. It has a free account. You can use it. You can code in Pine, and it's really, really useful. I unfortunately reached a couple of limitations, both with Dreamcatcher and with the new elastic spots that Pine is just not designed to do. So I'm having headaches and need to work around these issues by horrible ways. And I'm really considering now just pulling up my old systems and implementing the new metrics and maybe start sending signals from there. But then, of course, I will have a lot of different problems like fetching the data streams and making sure everything is in effect. I'm using multiple time frames, so I need to synchronize them, and the list goes on. So there's a lot of issues on any platform we are going to use, especially with the markets which are live and can change every second. So it's anyone who is going to start building strategies will see that it's not an easy task, but being able to focus on what's important and putting the hard work when it's really worth doing is the way to go. I think. So in short, start simple, just learn Pine and backtest your strategies in TradingView, and if you are great, then you can think about how to make them better.
Perfect. Thanks for sharing that. I've personally just been learning Pine script myself, and try to help the fellas out at CompendiumFi. And like personally, I started learning Pine scripts. I just learned like a simple first was RSI indicator. I learned how to automate it. Like overbought, oversold, like very simple indicators. Stuck fat, and now moving on to more complicated stuff.
Yep, exactly.
Yeah, so pretty much. So, do you have any promotions going on at the moment for people to try your new Elastic Series bots?
Yes, there will be promotions, but they aren't live yet. So on CompendiumFi, as you know, because you work there, in June they are rolling out a lot of updates. Like a crazy amount of new stuff is coming out, which is going to make trading so much easier, and also using bots will be much more accessible to anyone interested. And once these updates are out, we are going to do some promotions. So anyone who earlier used any of my bots, Dreamcatcher or Earthshaker, is going to get some free ones on my new bots, and also there will be discounts. What you can do right now, if you're interested in signing up, and if you don't have a Compendium account right now, is going to my website, overheadgains.com, and then grab my ref link from there for Compendium. And if you sign up with my ref link, you can enjoy a 10% discount on any of my bots from your first purchase. So if you want to sign up for 1 month, it will be 10% off. Or if you want to sign up for like 6 months, you're going to get 10% off of the whole 6 months price. And on top of that, we also have a compounding discount, which means for each month, you will get an additional 1% discount. So for 6 months, it will be 6% extra. So it's like 16%, a bit more in reality.
Perfect. And yeah, as I said, like we're excited to have your new trading bots on our platform, and you're always welcome here to have a chat. So thanks for taking the time. Does anyone have questions? Okay, good. If anyone has questions, feel free to come on the CompendiumFi Discord. Overhead Gains is there as well, so just tag him or us and feel free to ask questions. Thank you, everyone. Enjoy your night.
All right, team. Thanks so much, and enjoy the rest of the day. And thank you, everyone who tuned in to listen to us today.